Welcome everyone. So as the title says, this video is about stock versus option and what I look for when I'm buying stock of a company and what I look for if I decide to jump into options. I'll also show you what kind of returns I got when I played Tesla versus Apple and SoFi versus Palantir. The company names are not important, but what I'm about to show you in these companies is important. And we are starting right now. So I started investing in stock market in 2008. And over the years, I learned a few things which helped me look at companies or stocks and decide which route to take. Full disclaimer, what I'm sharing today is completely my opinion and I'm not a financial advisor, so please do your own due diligence. Now, I'll share my screen and show you exactly what I did over the years and how I traded these companies. On your screen are the charts for Apple and Tesla, and we're going to start with Tesla and Apple first, and then we're going to go into SoFi and Palantir, because in SoFi and Palantir, I'm going to share some real trades with you and show you why and which company is better and more juicier to place trade right now. This is the current market condition. It could change in a month, it could change in 2 months. So let's pick Tesla and Apple as they both are amazing companies. While Apple is more mature, Tesla is a true growth company, so will be perfect to compare these two companies side by side. These are the chart of both Tesla and Apple on your screen from the past 5 years, and I'll explain in just a second. On the right side is the price, and I'm gonna blow it up right here. So this is the price right here, and at the bottom are the years. So as you can see that if you put both charts side by side right here, okay, so you can see that how straight Apple has been since 2017, right here. So I'm going to blow up the Apple chart first, and this is from 2017. You can see Tesla or Apple has been going straight up like this since 2017. Now, Apple had a quite successful run. I mean, they are A of FANG. So this company is amazing, and this is where I would put my money to keep it safe and gain respectable return year after year. My overall Apple return is about 145%. Now, let's look at Tesla's chart. And as you can see from the Tesla's chart, that Tesla has been a really volatile stock. Bullish, but volatile. And this is where I will invest, but also play options in a big way. Because if I know what I'm doing, then I can make good, consistent money on Tesla stock on a regular basis. So under Tesla chart is the spreadsheet of all my trades. And I'm not sharing these trades with you, but I'm just showing you that how aggressive I am in playing Tesla. As you can see all the way, these are all Tesla trades that I made, option trades that I made in last 1 year. Now, let's look at Apple for a second. So these are my trades for Apple options. And as you can see over here, I only made a few trades in last 1 year. So you can tell just by looking at the trades that I play Tesla a lot more than Apple. I only made 38 trades on Apple, and I made about 190 trades. I left it there, yep. About 191 trades on Tesla and in just one account. And I have a total of 6 accounts. So you can see that how aggressive I am for these Tesla and Apple, or if you're comparing Tesla versus Apple. Now, let me bring your attention to few key points that I look into to base my decision. If it's worth playing options of a given company or just investing in stock. But first, we need to establish our conviction of a given company. If you show me a company whose chart looks like Apple or Tesla and ask me to invest, and if I don't believe in the company or don't know the company, then no matter how much conviction you or someone else have, my first reaction will be no. But if I study the company, and look, I said company, not technicals, so I'm not big on technicals initially. And if I enjoy reading on what they do and can actually understand, then I will definitely look into investing. And by investing, I don't mean only buying the stock, but the whole 360 of investing. So conviction on a company is really, really important. You need to be really convinced on a company. For me, at least, when I'm looking to invest, I really need to be convinced on a company before I can put my dollar on it. I've made mistakes in the past. I have invested in companies just by reading one article here and there, and I have lost money on them. Everybody makes mistakes. I also made mistakes. I also invested in few companies that were not in my domain. I had no business investing in those companies because I really didn't understand what they did. I only invested because somebody told me, or I read an article which I said, oh, this looks good, you know, the IV is high or whatever. You know, there are so many technicals that you can go by. And at the end, I ended up losing money. Any company that I invested from my own conviction have always done good. And that's what I'm trying to tell you, that, you know, the first basis that we have to set is that, are we convinced on the company? So now let's compare apples to apples, or in this case, Apple to Teslas. So options are a bit complicated for someone who is just starting out. So I'm not going to go into detail for everything you need to look, but I'm going to share just few key things that make sense for risk and reward, for me at least. So these are the 5 basic things that I look for in a company to see or to decide if I want to just buy the stock of the company, if I like the company, or I want to jump into playing options as well. Number 1, 52-week IV range. IV range is how volatile the stock is in the last 52 weeks. Then number 2, current IV. What is their IV right now? Number 3, what is their IV rank? Number 4, volume. What is the volume of the stock? Is it being traded too much, too little? And number 5, to me it's very, very important, is catalyst. What kind of catalyst is ahead for the company? Because catalyst beat everything else. If there is a huge catalyst coming up, it's going to beat all the IV ranks and the current IV out the window, because catalyst really is going to drive the stock price up and down. It doesn't matter what it is, because a good trader always makes money regardless of the price movement. Now we have established what I look for. Now let's compare why I picked Tesla more than Apple in last 1 year. Let's look at Tesla chart first. So as you can see on Tesla chart, the 52-week IV range is between 47 to 127%. The current IV is 36.06% and IV rank is 0%. Okay, now let's look at the volume. The volume of the stock around 2020, when the stock split, was massive, and since then it has been declining. Of course, we know what happened in the beginning of February and March. The stock was like made all-time highs, but it's a decent volume. It's not a low volume stock. I mean, it's been traded every day so much, so it's a great volume here. And we know that Tesla is amazing when it comes to catalyst. They have something or the other going on all the time. That's why this company is beautiful for playing options and also for investing. Now let's compare this to the Apple chart. This is Apple right here. Look, their 52-week IV is between 23 and 60%. And look over here, Tesla's 52-week IV was 47 to 127%. Okay, almost double on the top end than as compared to Apple right here. And then their current IV is 20.98. We know the current IV was 36.06 for Tesla. IV rank is 0 for both. And over here you can see Tesla's or Apple's volume is also amazing. I mean, a lot of shares kind of trade hands every day for Apple. So volume is kind of comparable to Tesla. What is not comparable is catalyst. See, Apple has not released a groundbreaking product since Apple Watch. That was the last product that came, which was like groundbreaking. After that, it has been just improvements on the product. To me, those are not catalyst enough. The new iPhone, okay, better camera, not a big deal. Of course, they will sell a lot more, their revenue will go up, but when we talk about catalyst, not at all. I mean, to me, that's not exciting. The next big catalyst for Apple would be Apple Car, which I'm hearing more and more now that there could be an announcement this year or early next year. We don't know, but I think that could be a huge catalyst for Apple stock, and that's where I will get more into trading options for Apple. For now, Tesla is beating Apple 3 out of 5 metrics for me. Better IV range, better current IV, and a whole lot more number of catalysts. And a plus of having a total market domination in the EV sector or in the energy sector. So that's why I decided those are the metrics that I looked for. That's when I decided that I want to play more of Tesla in options and then less in Apple. Apple I play here and there because I own a lot of shares of Apple. So for me to kind of play option kind of makes sense that they're just sitting there. Of course, you earn dividend in Apple. They have given a respectable return, but sometimes you need to put that stocks in use as well by selling covered calls and stuff like that. That's what I do here and there. So now Apple and Tesla, they both are big companies. They have established themselves over so many years, and we all know that these companies are here for long term. Now let's talk about the other 2 favorite companies that I often talk about in this channel. This next example will make you very clear that there are times when you need to take advantage of the market sentiments. So let's look at the PALANTIR chart. Right here on your screen is the PALANTIR chart. Okay, so let's look at the 52-week IV. 47 to 151%. Current IV is 56.82% and IV rank is 9%. Now, if you compare this with Tesla, this is a better IV, this is a better metrics right here, okay? As if you compare it with Tesla in terms of the 52-week IV range, the current IV, and the IV rank is all better than Tesla. Now, if you come over here, the volume is okay. It's not huge, it's not massive, it's okay. And I'm fine with dealing with this kind of volume though, no big deal. Now let's look at SoFi chart for a second. And it's very important, it's gonna get really interesting right now. Okay, so look at the SoFi chart. 52-week is 78 to 103. It's less than Palantir, but it's respectable. It's good. Current IV is more than Palantir, and IB rank is so much higher than Palantir. Okay, so if you compare, IB rank is 38%, and if you go over here, IB rank is 9%. So IB rank is the average of IB. So if you can see, the current IV is 56.82. Current IV for SoFi is 87.54. SoFi is a very new stock. It just came or became public in June. So they don't have much data, but the data that we have shows that SoFi is a better stock to play options as compared to Palantir. And that's exactly what I will show you. So let's place a hypothetical trade of selling 100 cash covered puts for Palantir for $27. Right here, I'm going to mark. So what we are going to do is we're going to sell put for 100 contracts for January 2023 and the strike price of $27. Now, strike price of $27 is about $2 higher than the current price. Let's say it's $25, so it's $2 higher, okay? The bank will put aside $270K for me to place this trade so I can get right here $76,300 in my bank account today, okay? So it's right here, it's 100 contracts times 100 shares equals 10,000 shares. Okay, so I have to buy 10,000 shares at $27 a share in January 2023 if the strike price is below $27 for Palantir in January 2023. So bank is going to secure 270K aside and say, you know what, give us this money. We will give you 76,300 that you can use whatever you want right now for it. Now, let's place the exact same trade for SoFi and put the strike price right here. So we are going to be selling 100 contracts for January 2023, put right here for $17.50. Again, the stock price is right now $15, so $17.50, $2.50 more. For this amount, the bank is gonna put aside 175K from my account because they're like, you know what, you're placing this bet, give us $175,000, we're gonna put it aside, and we will give you $71,500 for it. So for me to put aside 175K on SoFi, I'm getting 71,500. That's 40% right away upfront. If I place the same trade on Palantir right here, then I have to put aside 270K to get $76,000 back right here. See that? 76,300. That's 27% return upfront. Which do you think will I place, or which trade do you think will I place? Of course, SoFi, because SoFi is giving me 40% while Palantir is giving me 27%. So I'm getting a more juicier premium by placing a SoFi trade and versus Palantir trade. Even though I have high conviction on both the stocks and I know they both will be fine in the long run, but I will place my bet where I'm getting most return. Risk to reward. So that's what I look for when I'm deciding between the two companies, even though they both are high conviction companies for me. I love Palantir, I love SoFi. But for me to put my money aside, let's say 270K versus 175K, first of all, less money aside. On top, 40% more. And I'm getting less, yes, but the difference doesn't make sense because I'm putting less money aside, almost 100K. If you really look at it, and I'm getting a better return. So this is a much better trade to place as compared to the Palantir trade right now. We all have limited money. We don't have unlimited funds. So we need to make most of what we have. Now, below is a screenshot of my trading account, and you can see that I've taken advantage of the momentum and high IV on stocks like Hood right here, on NVIDIA, Hood, NVIDIA, SoFi, AMC. As you can see, that based on market condition, I place, and this is my earnings for year to date right here. So how much money I made from these stocks up until this year. So Hood just became public just a few weeks ago, and it was so volatile to begin with, and I took full advantage of that. Why wouldn't you, right? I mean, like if you know a little bit about options and stuff like that, this is beautiful kind of trades. And then NVIDIA, as we know, had a split. As soon as the split was announced, right before that, I bought calls. They were up a good chunk, as you can see right here. SoFi, I just gave you the trade. I played the trades like that. I got out, and then after the earnings, I'm still waiting to get back in. AMC, of course, AMC, we know what happened, on there. And GameStop is not even here because, again, that's a different story altogether. So you can see that, I constantly make, and as you can see, Tesla trades, I have done so many trades, and I have, of course, made good money on Tesla on a weekly basis. I've said that before. So as you can see that I constantly play options to the market conditions. See, here's the thing. I'm a lifelong learner, and I always look for innovative ways to make trading fun for me. Because at the end, if you're not having fun, then what's the point of all this? And that's why options are options, because we have a lot of options. We can do so many things from that. I'm attaching my video where I talk about my post-earning trades on SoFi. Do check it out over here, as it does explain few of my strategies. I hope I provided some value, and if you like the video, then please consider subscribing and hit the like button so we can reach out to more traders and investors. As always, thank you for joining me. Love you all. Until next time, you all have a sparkling day.